Well, hi there, everyone. This is Bruce at Fleet Capital Management. Today is Saturday, the 17th of June, 2023. We're going to take a quick look at the market. There are some minor short-term worrying signs that I'm seeing, and I want to show those to you and show you how we're doing and such. This video should not take very long at all. We always need to say that the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. Please subscribe to this YouTube channel. And also, if you enjoy the content, please click the thumbs up. If you don't like it, you can click thumbs down. But what I really prefer is that you email me and let me know the type of content you would like to see in these videos that would be helpful to you. I can be reached, Bruce at fleetcapitalmanagement.com, for any questions or concerns or comments. Homepage of our website is fleetcapitalmanagement.com. Two buttons. This one will take you to our most recent market videos, and this button up top will schedule a Zoom call and get you on my calendar so we can have a chat. Let's go over to our trend matrix first, updated every single day, updated yesterday, which was the 16th of June. Group one, we look at daily technical analysis, and we're still in an up situation. No cracks there. Group two, little bit more conservative. We use weekly analysis. We're in an up. Our moving averages, which these two columns will help us prevent participation or negative participation in any bear markets going forward, are still in the green, and both of those look good. Everything looks good. I want to first look at the indexes, and then I'm going to look at some individual stocks we're in. We'll start with the S&P 500, also known as the SPY. A couple of things. We've been in this, if we just look at the indicators, the blue is called the trend catcher, and that's still blue, of course. This is called the Hull moving average, is nicely green. I've got the 50-day moving average down here. We're on top of that, which is great. The dots are our ATR, or average true range dots. So everything looks good using that technical analysis. But there are two other pieces of analysis that are showing me some things that could suggest we're in for a short-term pullback, and I actually believe that we are. In this is money flow down here. Actually, let me grab a pen and I can show you. Finishing pen. Okay. This area down here, this little green mountain, is called money flow. And what you can see is that money is flowing into the market, or into the security, I should say. When it's red, like it is here, that just means the preponderance of money is flowing out of the security. And you can see we were kind of in a holding pattern where the security didn't do much. Securities need juice. They need something behind them, and that juice is orders and money flow. But then when you get into this highlighted area, that means there's excess flow coming into the market, which is good. It's going to push the prices up. And you can see this is almost a parabolic rise that we've seen for the last week or so, and we all love that. But parabolic rises always end, and you can see even here we had a nice rise. There we go, got a nice rise, and then that excess buying activity stopped, and we went sideways. Okay, so you can either go, I hate to be a broken record, you can go up, down, or sideways. Those are the three choices for the market. Sideways is called a consolidation period. And money flow has not stopped. We're just on, that's Friday, so we don't know what Tuesday, Monday will be a holiday, is going to show us. But this is of a little bit of a concern, because this usually means this is called an exhaustive rally, or late money came in, pushed it up. And what normally goes on after that is we will trend sideways a little bit to let everything catch up, or we will trend down a little bit and let things, again, catch up and kind of reset. The other piece of analysis that I'm a bit concerned with is this. This is called a linear, let's see, there we go, linear regression. And what this is looking at as a reminder is the last 100 bars, or 100 trading days. This red line in the middle is the average of those days, if you will, and then up here, this blue line is 2 standard deviations above and 2 standard deviations below. And what we normally see, is when we get above the linear regression, we generally will come back into it. And you can see we closed on Friday inside the linear regression, which is healthy. If we get out, you can see here, back whatever day this was, we closed outside and the market came back down. And what normally happens is the market will come back down either to the center line and bounce, or many times it will go down to the lower line and bounce, and then it will start coming back up. It went right back to the middle again. And this whole area in here is very, very, very healthy. There's nothing wrong with that. When we get up here is where it starts to get a little worrisome. And we have that, plus we have some exhaustive buying. So I wouldn't be surprised if we see a bit of a pullback next week. I wouldn't be surprised at all. If we go to the Qs, which is the NASDAQ 100, you will see a very similar thing in that we're just, and this is not major, but we're a little bit above, which would call for a bit of a pullback. And we've got some excessive buying going on. So again, those two things I would consider a pullback. Now, where's the pullback going to come to? I would say one of three places. It's either, if we're going to have a pullback, and again, remember, we might not have a pullback. We might go sideways, which gets us right back in this linear regression. And that's just a consolidation, which is very healthy. But the first area we could pull back to is to the center line, which is the mean. The second area we could pull back to is the bottom of the linear regression. But because we have the 50-day moving average, and I'm going to pretend for a minute that it's going to continue on that trajectory, then it wouldn't be surprising to pull back to right there and then bounce, because the 50 does tend to act as an area of support. Okay. So again, we're in a bull market. I just think we might get a little bit of a pullback or a consolidation. Let's go to our last index that we're in, and that is IWM, which is the small cap. And there's a different story here. Small caps have had a downward facing or trending linear regression. And we've broken above it. But in a downtrending linear regression, I'm not as worried about breakouts to the upside, because these breakouts to the upside, let me go back here, pretty much what we want is this whole box to start to change its trajectory. And I think it will, especially when, as we go through and this becomes the 100th day back and this becomes the 100th day back, this whole box is going to change its trajectory. So I'm not as concerned with that. We are above the 50-day moving average. I like that. We're above this, it's called a trend catcher line. I like that. Everything else on here looks good. And like I said, so I'm not as worried about IWM. I wouldn't be surprised if IWM, which is the small cap, leads the NASDAQ and the S&P 500 over the next, I don't know, few weeks. I just wouldn't be surprised if that happens. I don't know if it's going to, but I wouldn't be surprised if it happens. Let's look at a few of our individual stocks. We won't go through all of them, but here is Avgo, which has just been doing absolutely fantastic. The only thing I'm a little concerned with is, again, we are outside of the linear regression, and that normally means a pullback. We don't have excessive buying. Everything else looks pretty good, but so we're fine here. I just want to keep raising our stops. And again, here is our stop. If I go back to my little spotlighter, here's our current stop that's in the system, and it's way above the purple line, which is our entry price. So we just want to continually raise this stop higher and higher and higher as we can, and we will capture as much money as we possibly can. If we look at Builder, let's go over here for a second. Builder looks very, very healthy. Not worried about this at all. It looks like we're consolidating here. You can see we had a huge run up and then consolidation. And that's consolidation is very, very healthy. ELF, not worried about this. We're right on that center line. The only thing I'm a little bit worried about is money flow is negative. That's a problem. Money. So this is either going to continue sideways, or I wouldn't be surprised if it comes down a little bit. We don't have our stop above our entry point yet, but hopefully we will get there. FTNT, not worried about the linear regression. Everything looks pretty good. Actually, we have a new green hull, which is sometimes powerful. We got money flowing in. I'm not worried about FTNT. Hearn's been kind of a pain in the neck stock, but we're right in the middle of linear regression. We have some new money flow coming in. Not worried about that. I won't go through all of them, but Microsoft is one. This stock has been doing great. We have a little bit of an excess money flow there, and sometimes that doesn't mean a stop. Let me go back to my drawing tool for a second. We had some excess downside money flow. See that? Some excess, and then the market took off. Here we had some excess positive money flow. The market came down a little bit, but it continued. So that's just showing me what's happening now. It doesn't really predict too far into the future. Now, let's see. I need to go back here. Okay, now is one of our stocks. And that has been moving up nicely. I don't see any negatives here. NVIDIA, a little bit high, little high above the leer. I wouldn't be surprised if we get a pullback or something happening, maybe some consolidation. OC, and again, whenever you see this white above the purple, that means that even if we got stopped out, we make money. And the first goal is to get the white line, which is our stop in the system, above the purple line, which is our entry. Second goal is just to ride this up as long as it will let us ride it up. Schwab has been a difficult stock. I had bought this back here. I'll go back to my spotlight for a second to show you, but I bought it back here right when we crossed above the 50-day moving average, thinking that was going to be its turning point. It hasn't really performed for us yet. It's just continuing in its sideways action. This is a very short-term momentum is starting to turn back up. We do have some positive money flow. Hopefully that will not let us down. Couple more. Let's go to Shopify. Everything looks great on Shopify. I don't see any negatives whatsoever at all. Tesla, I do see a negative. And now that you understand it, you're starting to see it too. We're up here above the linear regression. Sometimes that's a pullback. And we also have a lot of excess money flow. And we had this parabolic short-term shoot up from right when we went into the stock. We went into the stock right here. And look at what happened. So our timing was fabulous, but we do have a little bit of an excess run. So that might go sideways a little bit. VIG is an ETF that actually has not been doing great. It's not in every account. It's in more conservative accounts, but it's starting to turn up. I like what I'm seeing there. XLK, a little bit above. So the bottom line is markets look pretty good. Our stocks look pretty good. In the last week or two, we've had what I like to call parabolic. Too much. It's been running up too much. Parabolic. What we love to see is this. Let me see if my drawing tool is still on. We like to see an angle like this whole thing, which is about a 45-degree angle. What we really don't like to see is this. That's not a 45-degree angle. That's parabolic rise. That's too strong. It has to rest or it has to come back into here. That's just the way the markets work. Okay, so that's a couple of securities. Let me now take you over to, bear with me one second, Stockopedia. What I do is since January 1st, I started this on January 1st, I have been putting every stock, this is not ETFs, this is just stocks that I buy into this particular tracking system. So this is every stock that I buy. And what I do is I put $5,000 into every stock because this is just for calculation purposes. This isn't for anything else. This is not your account. This is for me. But one thing that's on here that is wonderful and I'm very pleased with is this. The blue line is our stocks and the gray line is the S&P 500. And what this is showing me, if I even pull up the stats, and I don't have them through yesterday, I only have them through Thursday. But if I pull up the stats, there's Thursday. The returns on our stocks since January 1st are up 20.18. The return for the S&P is up 15.27. So currently, our stock picking is outperforming the S&P 500 by just about 25%. We're doing 25% better than the S&P 500. And I have been working very hard on our stock selection. Stock selection isn't the hardest thing. Timing is the hardest thing of the entry. And that seems to be working very, very well. Again, we're outperforming by 25%, which is pretty fabulous. I suspect as you look at your account, you're pleased with your portfolio. I can tell you that I'm working as hard as I possibly can to find new stocks, proper timing, continue this run. All of the work we did last year, or I did last year, creating this system that would match today's market is working. And the proof is in the pudding. It's working very nicely. Most of my Group 1 accounts in total are exceeding the S&P 500. My Group 2 accounts are just a hair below the value of the S&P 500. And if you have some Group 2 accounts, you know that I'm making some changes to Group 2 to get a little more return boost into your Group 2 accounts, and without taking any additional risk. And I think we're actually going to be taking a little less risk, but still generating better profits. So that's a story without belaboring the point. Things are working very well. I'm always here if you want to do a Zoom call, and I would like to do a Zoom call with you if you have any questions. We haven't done a lot of portfolio reviews lately because of these videos, but if I reach out to you and with an email and say that I'd like to do a portfolio review, it's because I have something specific I would like to talk to you about, just to make sure you're up to date on everything. So that's the story. Have a wonderful weekend. And again, we'll be back on Tuesday. Monday is Juneteenth, so the market will be closed. We'll be back together Tuesday morning, and I'm looking forward to the second half of this year. I think in the near term, we might have a short-term pullback, and then I think we're going to have an explosive rest of 2023. So I'll be back with you Tuesday morning. We'll continue working. Talk to you then. Bye-bye.